Welcome. Today, we are dissecting the critical intersection of artificial intelligence, the SaaS business model, and their aggregate impact on major indexes like the S&P 500 and the Nikkei 225. We will analyze how technological infrastructure is reshaping market valuations. To understand the current momentum, we must look at the S&P 500. It is no longer just a diversified basket. It is heavily weighted by technology. The performance divergence between the top tech firms and the remaining 493 companies is historically significant. Contrast this with the Nikkei 225, and while often viewed as more traditional, the Japanese market is undergoing a governance revolution and resurgence in semiconductor manufacturing, creating a unique correlation with global AI trends. The primary driver of this market movement is capital expenditure. Hyperscalers are pouring billions into AI infrastructure. This CAPEX boom is the leading indicator for the revenue growth we anticipate in the software layer. Software as a service is evolving. The traditional subscription model is now being supercharged by AI integration. This creates a flywheel effect. AI features improve retention, which stabilizes annual recurring revenue or ARR. Investors are looking for operating leverage. Historically, growing revenue meant growing headcount. AI allows SaaS companies to decouple revenue growth from headcount growth, leading to significant margin expansion. How do we value these companies? We will return to rule of 40. In an AI-driven market, companies that balance high growth with profitability are receiving premier valuations compared to growth at all cost firms. There is a strategic divergence. The US market dominates in platform and generative AI software. Japan, however, holds a strategic advantage in robotics and hardware integration, the physical application of AI. Looking ahead to the next 24 months, we anticipate a shift from infrastructure build out to the application layer. As AI models commoditize, the value will accrue to the SaaS companies that own the proprietary data workflows. Understanding these macro trends is essential for navigating the current volatility. Whether you are tracking the S&P 500 or analyzing niche SaaS players, the data tells the story. Thank you for listening.